Facebook touched a fresh all-time high today before pulling back. And we have Rick, who's in Laval, to ask a question about this company. Go ahead, Rick.
Yes, hi, gentlemen. Thank you for taking my call. I agree. When its IPO came out, I was speculative. I didn't understand how the company functioned. I didn't touch the stock. I didn't buy it. After so many months and so much time, I learned a lot from your show. Thanks again, BNN. Facebook now, I believe, it's going to go up quite high. Look what happened to LNKD when it first came out. It was like $60, $70. It's over $200 the social network now. I've already made about 25-30% profit. I was wondering if I should buy some more shares. Thank you. I'll hang up and listen.
Thanks, Rick.
Okay. So, Rick, I'll just give you sort of my initial thoughts. We stayed away from Facebook for a very long time until two things started to happen. One, you got back towards IPO price, because once you get up and through IPO price, everybody's making money. Nobody's a seller. Okay, so very often when companies trade below IPO price and slowly make that turn, when they ultimately get there and get through, that's something you should take a look at. It happened to coincide with news that their mobile business, their mobile platform was starting to work. And obviously the user base is enormous. If they can harness that thing, then that could be quite attractive. I think that what people are looking at now is that the advertisers that paid them for that mobile platform have had initial success, and they're likely to open up their wallets and really start to spend some money. And so the next quarterly report could really surprise, we think, to the upside. Stock's behaving extremely well, so this is one that we'll follow along with stops. Look, it's an expensive company. There's no way around it. So is LinkedIn, but it's in the right group. Social media, media in general, and certainly digital media, all three are doing particularly well. So I like the company. I would continue to buy the stock. Just understand there's risk involved. Mm-hmm. Pick your exit. If it stops working, you got to be gone. But it looks as though this next earnings period could be an important one.
Okay, thanks for that question. Here's Michael now, who's in Portage La Prairie in Manitoba. Go ahead.
Good evening, gentlemen. Thank you for taking my call. I'd like to ask David for his analytical assessment on Cenovus Energy.
Okay. Well, sorry, go ahead.
And more specifically, David, do you anticipate any significant share appreciation going forward in spite of the stock being range-bound for some time?
Right.
Thanks, Michael.
So, Michael, I have to say our energy exposure currently is specifically in certain regions where there's very rapid reserve growth. Cenovus, I wouldn't say is there. The other area would be those that are the high-yielding energy companies, again with very low decline rates, and I wouldn't put Cenovus in that camp either. I think you have to be a little bit careful because in general, energy has been underperforming the oil price and the gas price. So I think that there is some disbelief that $108, $109, $110 oil sticks around. So we're trying to find those that have what they call very high recycle rate. In other words, you put in $1 in the ground, how many dollars do you get out in new reserves? I think Cenovus doesn't meet any of those tests right now, so I would stay away.
And you have an energy recommendation among your top picks. A lot of demand in terms of calls and emails and tweets today for David, not surprisingly, and we've cobbled a bunch together in the Market Call Minute. David in Ottawa called in about the CN Rail.
CN Rail, I like CN Rail for the north-south access that they provide between Canada, U.S., and Mexico. I'd be a buyer of the stock.
Do you hold it?
We own some stock, not a lot.
All right. Peter's in Georgetown, Ontario. Labrador iron ore.
It's in a tough group. The commodity group has been very, very weak. Having said that, a beneficiary of royalties on production for the Labrador Iron Ore Company of Canada. So there's not so much risk. It's not tied to the price of iron ore. I would buy the stock.
But you don't hold it?
We do own it.
You do? Okay,
we do own it.
Frank's in Montreal. Advantage Oil and Gas.
Again, we prefer the higher yielding, more oily names than Advantage.
Okay. Jack in Calgary, Tesla Motors. Does this intrigue you?
It does intrigue me. I've ordered a Tesla, and I'm waiting. I have. I'm turning green. We don't own the stock. Stock's behaving remarkably well. I wish we owned the stock. High momentum. Be prepared. Use a stop.
Michael and Hamilton on GE.
GE, we think, is very attractive. It's in the industrial space. Industrials are performing very well. They're spinning out the financial services business. I'd buy the stock.
And do you hold this?
We do not own it currently.
Okay. And lastly, Ron called in about Boeing.
This is a tremendous company. The defense and aerospace sector is performing really well. All the suppliers into the space are performing well. We owned the stock. We got shaken out of it. I wish we still own it, and we may buy it back.
Great run on Boeing. It's probably an all-time high today, it looks like.
Yeah.
I'm guessing.
There is a long runway for this airline segment.
Yeah, so to speak. And presumably the stock moving up partly on the idea that their products may be used in Syria, although that looks less likely now. But yeah, all-time high today on Boeing.
Look, they say they're going to return 80% of the cash flow to shareholders through share repurchases and dividends. And they have an 8-year life in their order book, and that's getting bigger. The Dreamliner is going to be a very profitable plane for them. This is a great company.
Okay, very good. That's the Market Call Minute. We'll take a short pause here, and we'll get to the top picks of David Burrows after this.